products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask the Expert show on W4CY Radio and Talk4 TV, where we bring you educational information from top local experts in the fields of legal, health, financial, and home improvement. Now sit back and listen to experts in family law, association law, hearing loss, business brokers, home care, along with many other topics. Now here are your hosts, Steve-O and Sophia.
Hey, good morning. Excuse me. Good afternoon. See, we have so many shows in so many different time zones. And, sometimes you just don't know if it's morning or afternoon. I just got an email from our next guest, Rebel, said we need about 10 minutes. Robert's having delays and computer issues. We know about computer issues, don't we?
Oh, yes, we do. Hey, I found what else fell off the desk.
Oh, that's good. Hey, welcome. We've got such an incredible show for you today. Today's show, we have a lot of homeowners that watch and listen to our show. And I got to tell you that about 10 years ago, I had major damage done to my home. And I got a quote from the insurance company. And I don't know, I could probably not even teach someone how to drive a nail. I mean, I'm horrible when it comes to any type of home improvement. So I really didn't have an idea about cost, but something just bugged me like it's not something, it's got to be more. And I swear to you, I was about to accept the offer when a friend of mine said to me, "Why don't you get a public adjuster?" Now, I'm telling you, I'm like many of you all, I have never heard of a public adjuster. And I wouldn't even know where to go find one, but my friend had a public adjuster. And I'm going to tell you, I was offered $35,000 from my homeowner's policy. And
Sorry to
it,
interrupt, Steve, but Joseph is here.
okay, go ahead and have him join us while I'm telling my story. So they offered me there. Hey, Joseph, how you doing, buddy?
Hey, Steve, I'm good. How are you?
I got your email. We're telling the audience out there how I was offered $30,000, and my public adjuster came in and got me $165,000. Now, listen, I don't want to get anybody's hopes up, and I'm not saying every claim is the same, but I was ready to settle for $30,000, and the public adjuster got me $165,000. And I got to tell you, that's why I think this show is so important. And we have one of the greatest public insurance adjusters in both Joseph Fernandez, who's just joined us, and Robert Crown, who we're waiting on. So good afternoon, Joseph.
Hey, Steve. Good afternoon. It's happy to be here. And Robert will be joining us momentarily. He's having some issues with the computer. And yeah, so probably about 10 or so minutes. But yeah, you bring up a good point. Public adjusters are here to essentially, we're kind of like the secret weapon with the insurance companies. Not a lot of people know about us, but most people hear about them from friends or family who have used them. and primarily over back east due to a lot of the inclement weather from the wind, hailstorms, hurricanes, where there's constantly really large disasters. So that's why a lot of people tend to know about public adjusters out there. But out here, we're becoming increasingly popular, well-known in California due to a lot of the firestorms that have happened over the past year or so.
We have a mortgage company in Los Angeles, and he was on the other day with us, and he was telling us that people can't even do anything in the Palisades area where most of the fire was. That because he said, I told him that we have a public adjuster coming on. He said they're not even there yet; they're still clearing out land over there.
Yeah, I mean, there's the problem. That is a huge issue. Everyone that's, my heart goes out to everyone that was affected by that.
Yes.
And, you think that the main problem is getting the insurance company to pony up and provide the money and the funds necessary to rebuild. And, that is in and of itself, it's a struggle. But now you have to deal and comply with the building code and the regulations and the very, very tight environmental factors that are now present due to a lot of the toxicity from all of the chemicals that have leached into the soil and whatnot. And so a lot of that is compounded and creating such a big problem in people that want to rebuild, because the first thing you think of when you lose your house is, I want to rebuild that back up. That's the best way to kind of combat that sense of defeat. And people are unfortunately realizing that it's not that easy, and it's actually going to be very, very difficult. So it is very unfortunate.
Joe, so that we never try to make this a political show, but I will never forget a few days after the fires, and the president came in and he sat there with the mayor. I don't think the governor was there. And she was trying to tell him, he was really upset because he said, it takes you guys forever to get permits. And she said, no, it's not going to happen this time. We're going to have permits right away. And one of the things the mortgage company told me is it's taking forever to get even anything, any kind of permit. So the mayor was not very truthful when she told the president that they've gotten all those permits, the time it takes to get them taken care of.
Yeah, I mean, we've most of us at some point have gone through the pain of having to go through a permit process. And I would say there's a lot of things in life that are a lot easier than going through the building department and getting a permit, because it can be either you have a very good experience or you have a very bad one that just takes a very long time. California, the permit process in California takes so long just because of how many hurdles you're having to jump through and compliance and a lot of things, so it makes it that much more difficult to be able to navigate that process. And then on top of the fact that you're dealing with environmental issues and hazards, it makes it very, very difficult. So yes, it's just one thing after the other compounding that makes it a very delayed process, unfortunately.
Well, today we are going to be talking about policy coverage and underwriting. And God, I've got so many questions for you and Robert. I want to start off with, let's talk about replacement cost.
You can hear me now. I am here, right?
Yeah, we can hear you, Robert.
Oh, there he is. Okay. Good afternoon, Joseph.
And Robert,
Good afternoon, Robert.
It's all right. Better late than never.
Absolutely. No, we're doing fine. We're just getting started with questions.
Okay, good.
So what is replacement cost?
Joseph?
All right, I'll take it. So the replacement costs, known as RCV, for short. A lot of things in the insurance industry is all acronym based. So replacement costs is the actual cost it takes to replace the item, not subtracting depreciation from it. So most of us want to have a policy that has RCV, replacement cost value, in it, because it means the insurance company is required to pay you the cost to replace something, regardless of you having bought it 10, 20, 30 years ago, where what they like to do is depreciate it, which means the depreciation that they take off of it is withheld until you go and you spend and you buy that item or replace the materials that were damaged throughout your home. And then at that point, they'll then issue you that supplement, which will be the RCV. But in most cases, insurance companies will pay you the ACV, which is actual cash value. Actual cash value is the replacement cost minus depreciation. But once you go and you do the work and you say, hey, I've spent the money, I want that recoverable depreciation back, then you get to be made whole by the RCV, replacement cost value. So it's very important to make the distinction that just because you have RCV, you don't always get it on the front end. You get it when you complete the work, showing proof of completion.
Robert, under the property insurance policy, what is actual cash value?
Well, you understand that replacement cost is today's cost to effect repairs based on what you have in the way of a scope of work, which is oftentimes disputed. But like when you buy something brand new, it's right off the shelf. But the minute it leaves the store, not unlike a car, the minute it leaves, it has no longer the same value. It's like new, but it has aged just by virtue of the time it took you to take it off the lot. In a house and in property insurance, the insurance company wants to be given credit for that depreciation so that they're not paying you for a betterment or for a better house, essentially, until you prove to them that you've spent the money. Sometimes that just involves sending them pictures of the completed work. But in the calculation of what they owe initially, there is always given consideration for depreciation. The age of a roof, for example, is a good example. But overall, it applies to anything. If you had a kitchen fire and it ended up being, $100,000 repair, they're not going to write you a check for $100. They're going to take depreciation on the appliances, on the flooring, on the cabinets, and things like that.
I got to tell you, we're talking about insurance policies, homeowners insurance policies, but there's so many people that have never used a public adjuster. There are so many people who don't even know that there is a public adjuster out there, and all the great and positive things that you can do when a person does have a claim. What happens when someone contacts you for the first time? Would you walk them through the process?
Always. We ask a number of questions. They have an abundance of questions because they're unnerved by the process. They haven't been through it before. But we have an equal amount of questions for them, and it really starts with certainly our understanding of what they're dealing with. We oftentimes are called when people are, at their wit's end, but we still have to look at their situation closely and look at the kind of coverage that they have. So we walk them through it to let them know effectively what they're going to have to do for themselves if they continue to handle the claim themselves. And if they're going to consider working with us, we want them to understand the nuts and bolts of what we do.
Tell people also how you charge.
We just, I was going to say something funny, but when you're dealing with a loss, is really nothing funny.
Yes.
But you have to find humor in all things because it's important anyway. Public adjusters work on a percentage fee basis, and that incentivizes us to do as well as we can for our client. Depending on the size of the loss, the fees average 10%, but sometimes they can be more. If we get involved late in the game, we will oftentimes be asked, well, are you guys willing to work on new money and not charge me on what they've already given me? And we say yes, but the percentage is going to be higher because there's the same amount of work for us to do, whether we got hired day one or 6 months into it.
And Joseph, you do so much work before you even realize your first dime.
Yeah, that's correct. I mean, there's a lot of legwork that goes into preparing a claim and getting it to the point at which you are formalizing your opinion and approach on where you feel like the numbers need to lie. And that's why it's important for us to ask a lot of questions, do a lot of the discovery early on before we take a claim on, because it could be up to 12 months, even 24 months of work that we end up not really getting anything resolved on because the claim wasn't the right fit for us to begin with. But in most cases, when a claim is right for us, there still is a lot of work that needs to be done with negotiating, putting our estimate of repairs together, and just really understanding the nuts and bolts of every claim, because every claim in and of itself is completely different. No two claims are ever the same. And really being able to adopt handling every claim based on its own merits is extremely important, as opposed to having a cookie cutter approach, which we feel isn't worthwhile. It doesn't work really well.
We just got our first text in from Rex in Malibu, wants to know, do claims normally cover mold and mildew?
No, they don't.
And you're on the water, so there's probably a lot of people who realize they've got mold or mildew.
It's fairly common in the environment generally, but water claims are particularly challenging because nobody really knows whether the damage has been ongoing until they actually see it. So mold, as you can imagine, grows over time, and many times we get calls for people that are filing claims for the first time, and lo and behold, they find out that whatever was leaking for a long period of time. And that's why there are specific limitations under most policies for things such as mold, along with the exclusions that people get. So
we're here with Robert Crown and Joseph Fernandez of Crown Adjusting. We target with this show the California, New Mexico, Nevada, Colorado, Oklahoma, Washington, Idaho area. Quite a big area. So if you're in any of those states, you can give them a call. What's the best number to reach you guys at?
Well, the number that's scrolling across the bottom of your screen is for Joseph and I directly. And you can find us on the web at crownadjusting.com. We are, we're happy to talk to people about, how they can advocate on their own behalf, presuming they're not sure what direction to go. And there are public adjusters throughout the United States. We're proud members of a national trade association that kind of polices its own. It's called NAPIA, the National Association of Public Insurance Adjusters. Should roll off my tongue since many people call me, because many people call us through that association link.
We think about when you've got a claim, it's usually maybe flooding or fire, but you cover other areas too.
Well, we deal with things as a roof collapse from a tree fall, or a truck goes into a building and it takes out the central pillar and the whole roof comes down. We get calls like that very often, and as long as no one's hurt, we're certainly happy to help people. I think when there is a personal injury involved, the most important thing is to deal with the immediacy of that situation, and people will always be able to talk to PAs and have them involved in a claim where there is a possible injury to folks. But that's the first thing that we ask normally when we talk to people: was anybody hurt? So.
And what about break-ins too? People who've had their home broken into.
Theft is fairly common. A public adjuster can be involved in that as well. Frequently, depending on what's taken, that is also a challenging claim, not unlike a water claim, because you have to have proof. To the extent that you have receipts, you have to have proof of what was taken. And not everybody does a pre-loss inventory of the things they have of value. And the folks that have, high valued items, frequently they'll have a schedule. And your agent would encourage you to have a schedule for valuable property, because if it's not listed on that schedule, the insurance company has the right to shop it. And if they go to a jewelry appraiser and that diamond ring that you paid $14,000 for appraises at $10,000, you're not going to get the $14,000. So jewelry is the specific limitations for most properties. Homeowner policies have specific language with regard to theft, regarding jewelry, regarding electronics, and antiques, rugs, and a number of high value items.
One thing to
Ryan,
note that's really important too.
Go ahead, Joseph.
Yeah, one thing to note, and we have this issue that comes in from time to time, when there are claims associated with vandalism. Let's say, a lot of people from the show are probably own rental properties that are either in state, out of the city, or out of state. It's really, really important when you are performing your yearly inspection that you document and you take photos of everything as is, because if and when it gets to the point of, kicking out your tenants forcefully through either an evictions process or court order, sometimes you're going to get tenants that are going to get a bit disgruntled, and they're going to cause and inflict damage to your property. And the only way to really know if that was something caused by them, where the insurance company will question, is if you have pre-loss condition photos of the building and the structure and the interior prior to that claim being made. So that's something that, when we talk about vandalism claim, that it's extremely important to have that. And if you are a property owner, that you are on top of it by having documented photographs of what the place looked like prior, in the event that does happen, and if you are going through that process of an eviction.
Robert, how does a person know if they have enough coverage?
It's a really great question. Most of the time they don't, unless they are alerted to a crisis situation like what has happened in Los Angeles. Then they become very interested. When you buy insurance, you're assuming that the agent that's selling you the policy is establishing those values carefully. So you get into some interesting discussions about how it's insured, especially when there's a loan involved. The bank will want you to carry at least enough insurance that protects their loan interest. But replacement cost is very much in the news these days, because the cost of construction in California have gone up exponentially. And most people don't know it, but they are slightly, or even in some cases exponentially, underinsured. but that's why people have to get pretty invested in figuring out whether or not they have sufficient coverage, hopefully long before they have a catastrophic loss. And they can consult with contractors and people in their community to figure out just how much insurance should I have on my house. In California, you go to different places and there's a sort of a ballpark number. I wouldn't want to scare people into thinking that they don't have enough insurance, because many people don't have a calamity on their hands where the whole house and everything in it is gone. So normally, if you have a partial loss, the amount of insurance that you have will be sufficient to address that. But we could talk about, cost per foot if you want.
I know that there's people out there right now going, you know what? I don't know what my policy says. What should people look for in their policy to make sure that they have enough coverage? Because, like my policy, the print is so small, it is pages long, and I could not tell you what's in there.
Well, we could tell you where to look, Stephen. You start
off there.
If you go to the front of the policy, you're going to look for what's called the policy declarations pages. And I want Joseph to weigh in here, but the typical homeowner policy will have coverages A, B, C, and D. A would be the dwelling, coverage A, building. B would be appurtenant structures, or perhaps an other structure on the property, like a garage, a detached garage. C would be coverage for personal property, and coverage D would be loss of use. And it might make sense for us to spend a little time on that to explain what those coverages are. Joseph, I'll pass the baton to you. You can talk about coverage A and B, and maybe I'll pick up on coverage C and D.
Mm-hmm. Yeah, sure. Well, one tip that I tell a lot of our clients when we have a wide array of clients that just want to hand the whole thing to us, and some that actually want to learn throughout the process of what we're doing, which is totally fine, because we're here not only to act as your advocate, but we're here to educate and make sure that you understand the process, not as well as we do, but at least have a surface level understanding so you are better prepared, hopefully not for next time, but anyhow. So one of the things that I tell them is, if you have an electronic policy, for an example, a PDF of your policy, one way to easily find things, and due to the policy being anywhere between 60 to 80 pages long, is just hitting Control F in your PDF reader and typing in whatever keywords you're looking for, and then it'll locate all of those keywords. So if you're looking for, everything associated with your code upgrade coverage, you just say Control F, code, and then you hit enter, and you start going through that entire policy, anything that says code referenced in those 80 pages. That is one way to find it. That's a little bit of a tip that I use myself, because, we don't have time to sift through 80 pages.
Right.
Do we do it? Of course, when we have to, we do it. But just for fun, we don't read policies, before bed. We definitely don't do that. We don't have the time to. But yeah, so that's a little tip there for everyone. Now, as far as coverage A, as Robert mentioned, coverage A is dwelling. So that's your immediate home property, everything on the outside in terms of the exterior structure, and then everything on the inside in terms of your finishes, your floor, walls, ceilings, cabinets, AC, oven, things of those natures. And so the idea is your dwelling is supposed to cover your immediate home structure. So you make sure what it costs to rebuild your home is essentially what your coverage A is covering you for. In some instances, there's called extra replacement cost. Extra replacement cost is an add-on to your coverage A, which means that if you somehow reach your limit of coverage A, in this case, let's use 500,000. If coverage A is 500,000 and you hit that $500,000 threshold and you go beyond that, because of, like Robert mentioned, astronomical, out of control construction costs, materials, labor, you name it. A lot of people find themselves going over that. And when you do, and you have extra replacement, that extra replacement can sometimes be 10% additional or 25% or even 50% on top of that. So that would be 50% or 25% of your coverage A. So you get that extra kick in that goes into your policy. And so at first glance, you're like, ooh, I don't have enough insurance. But then if you look for that extra replacement coverage, you may be insured for enough based on that alone. So that's something that it's important to point out. In terms of coverage B, as in boy, Robert mentioned that's other structures. Anything that's not attached to the dwelling, your house, such as a shed, a carport that's not attached, a fence that's not attached, exterior fence, detached garages. I know those are sometimes popular in certain areas. Those are all other structures. And then, so your coverage C is contents, personal property. So that's everything. If you were to take your house and turn it upside down and everything that falls out, that's your personal property. So that's your, your clothing, your TVs, electronics, your beds, your mattresses, your blankets, valuables. As Robert mentioned, a lot of people think their high-end valuables are covered just because they have, no, I have $500, $300,000 in personal property coverage, and I have my ring for $14,000. There's always exclusions with those types of things, with jewelry, with gold, any of those things. So it's always, always, always important to check with your agent, because unfortunately, you have to do your own due diligence. Your agent is only as good as the information you provide. And when that happens, you need to get what's called a scheduled personal property, which, as Robert mentioned, it's allowing you to attach the value based on an appraisal put on that piece of jewelry. So in the event of damage, in the event of theft or fire, you're covered for that full amount. So that's really important to mention if you have any high-end jewelry, gold, furs, things of that nature, gold, that you want to get a scheduled personal property in addition to what you're already covered for in personal property.
I could add that a schedule alleviates a lot of problems, because the language in a schedule it's predicated that you're paying a premium based on a per $1,000 unit of value. So it's essentially an agreed value endorsement. If you insured that ring for $14,000, they're not going to argue with you, even if they shop it and they think it can be purchased for less. You're saying, I'm willing to pay a premium for this amount of coverage, and I don't want to be put in the unpleasant condition of having to negotiate on something that I paid extra for. It's pretty much it's worthwhile for many people if they want to spend the extra money. It's, people think right away it's going to cost a fortune. It really depends on what you're insuring. If you consider coverage B as other structures, I was going to just tell Joseph in lieu of what he said, or in light of what he said, that other structures could also be in-ground structures like retaining walls, a hardscape on a very large piece of property. The insurance company might say, well, that's, the rocks that you put along the perimeter of your property. I mean, I would say that's not something that isn't insured. It's part of what you paid that coverage for. Other structures, and that in-ground decorative rock wall that you had built, that's insured. But then, if we're going down the alphabet, coverage C is your personal property. And many of the folks in LA are just getting around to getting their personal property claims resolved. But when you have, $500,000 or even $1 million in coverage for your personal property, they don't typically write you a check. You have to put together an inventory. And that's done, frequently it's done room by room based on pictures and a memory list of what you had. Technology is making it possible for people to actually inventory their items before they ever have a calamity on their hands. And we're using the technology now to help prove our clients' claims based on just the existing personal property in the house, because everything can be memorialized in what's called a virtual reality scan. That has a value to people that have never really experienced a loss, and you can pay to have a technician come in and literally take a video, if you will, of your house in its present condition. I mean, you have to be willing. You can't be uncomfortable with somebody coming in to do this for you, because you're basically opening your house to maybe somebody that you think is a stranger. But most of those professionals are licensed and bonded. But getting back to personal property coverage, you have any number of items in your home. Someone that accumulates as much property as many older adults accumulate over a lifetime is a pretty overwhelming task. For some folks in Southern California, they've been lucky enough to have insurance companies come and offer them 50%, or in some cases 75% of their coverage C limit. So someone that has $1 million in coverage, if you're asked to prove the value of your merchandise, that's a pretty long list to get to $1 million.
Yeah.
And so that's a real hardship for most people. In California, because of basically insurance regulation, and because California has been inundated with large claims over the last 5 years, FEMA has stepped in to set some standards for how insurance companies deal with personal property losses. So a lot of those folks have gotten a pretty good preliminary settlement from their insurance companies, because they've been willing to pay 50% up front with nothing. Others have come along and paid 75 or 80%. And then in some cases, when they do a post-loss inventory, some people have been lucky enough to get their policy limit without having to present anything. But that is an exception, a big exception. So until you prove...
Excuse me, Robert, somebody just wrote in wanting to know about an above ground pool. Is that covered?
Yes, it's covered as an other structure.
Okay.
But it would never be for more than what it would cost to purchase and maybe have that pool delivered and set up for you.
Mm-hmm.
I think the takeaway for folks, if we're talking about insurance value, how do you know if you have enough insurance? Most of the time you don't. But you can have someone sit down with you and advise you as to how much coverage you want, so you're not in the unfortunate position of finding out after the fact you don't have enough. And right. we get calls from people frequently. I think it's remarkable that we get these calls, but I'm happy when people call me and say, I haven't had a loss, thankfully, but I want to review my policy coverage, and I thought perhaps you'd be a good person to talk to. And I pay them a very nice compliment, because we are the people to talk to.
Exactly.
And we don't have our hand out. We do this for a living, and we know, I'd like to say we know better. We don't have all the answers, but we could advise somebody how to go about determining whether or not they have enough coverage. There's a very easy footnote on that, actually, because if you look at the coverage A limits and the extended coverage protection, you can do your own preliminary estimation just based on the amount of coverage you have if you add all of those buckets together. Because what you end up doing is you look at the stated limit, you add in the extended limit, which is a percentage over and above what you have. You can even add in some of the smaller buckets to get to a dollar number. That's the amount of insurance that you will get if you can prove that your insurance company owes you all of that as it relates to the dwelling. But there's one important variable that you have to take into consideration: the square footage of your house. So if you're doing some of this detective work on your own, or even if we help you do it, we want to get to that overarching number. And then we will ourselves tell you how to figure out how you're insured per foot if you can't figure it out yourself, by taking the extended limit for your 1,700 square foot or 2,500 square foot house with all the bells and whistles and dividing it by the square footage to get to that number. We're not telling people that so they're going to stay up at night wondering if they have enough insurance. Right. If they call us before the fact, they will have the opportunity to talk with their agent or their broker, if they're not afraid to talk to them, about how to increase those coverages. While we're busy educating people, the natural reaction in California anyway is they're afraid to do anything for fear that their insurance company is going to drop them.
What's going on with the insurance companies, especially in California? Are any of them coming back? Because we had heard that a lot of them had shut down and moved on.
Yeah, they're coming back. I think because the Department of Insurance is talking with underwriters that are, approved underwriters in California, and the ones that are coming in to fill the gap, they're charging, they're charging more for the policies they offer. And I don't know anyone, if you look at what happens to a community, if the government, if the people that have a vested interest in the community, if everyone that's directly or indirectly affected by a calamity, such as the folks in the Palisades or in other areas, because there's been a host of disasters in California over the last 6 years. I'm thinking Altadena, for example. They do want people to come back, and so they want to come back to rebuilding their house and having insurance companies that are going to be willing to insure them. And because California has been a user-friendly state, there's regulations that require those insurance companies to offer coverage to those victims or survivors, if you want to be more positive. So, thinking longer term, what would happen to all those communities if those people couldn't get insurance, or if they if they couldn't get low interest loans or some kind of financial help? I mean, people wouldn't be coming back at all. So
I think you mentioned that the amount of insurance, did you say it's based upon the loan amount? And if that's so, shouldn't they be adequately insured?
Well, you would think. But when they borrow money, the person that is figuring out how much coverage is needed asks a number of questions. They'll ask, what did you pay for your home? They will ask, where it is. The actuaries that determine cost of construction look at the values of homes in California to come up with a calculation where they can place a value on the dwelling, and for it to be a sufficient amount of insurance for them to sell that policy to a consumer, with the hope that if they had a loss, that they would come out fine. As that relates to a, a lender, it's actually a different set of requirements. The lender will provide some oversight on how how those values are determined, but they're more interested in the amount of money that is borrowed by the individual mortgagor than whether or not they actually have enough insurance to rebuild their house. Because the first person that's going to get paid based on an insured loss, I mean, yes, the policyholder is going to be named on those checks. They're the ones that are going to be making a claim, but they're not going to be able to do anything without the lender signing off on the issuance of proceeds so the homeowner can start repairs. And there's a whole series of requirements for that to occur, which we can talk about.
Is there earthquake coverage?
Yes. People are writing earthquake policies now. I just heard about a company that's come into California, and I looked at, because I used to carry it. I don't carry it anymore. It's very expensive, and the deductibles are significant. I mean, you could have a 15% deductible. So the first $250, $300, $500,000 based on that deductible. And that might mean that amount of insurance, or that amount of cost has to be borne by the consumer before the insurance company agrees to pay a dime. So it has to make sense.
Yeah. We've only got a couple minutes left. Tell people that are going through the claims process and don't feel like that the insurance company is offering them the right amount of money. Tell people why they should hire Crown Adjusting.
Well, I can tell you how we're different than our competitors. I think they should most assuredly talk to someone in the know about their situation and what a public adjuster does. We're not a large company. We want to help most of the people that find their way to us, but we're not a perfect fit for everyone. And we like to get involved directly and do the work. So we're not just offering our services as professional salespeople. We're the guys doing the work. We provide a high level of personal service, professional advice giving, years of experience, and I think our reputation has a lot to do with someone putting their faith in you to get them through what is otherwise a tumultuous, tedious, time-consuming, and challenging exercise. So Joseph and I both laugh about this. If we spend enough time talking with them and educating them about the pitfalls, not only will they be in a hurry to hire us, but they'll be all in because we have dealt with all kinds of situations and they know they don't want to have to deal with that on their own. So we're good at what
customer service is very important to you also, right?
Yeah. I mean, we're very good at what we do. And sometimes we say no, not because we don't want to help, but because their expectations and or some of the problems that they will bring to us with their own specific situations may make them a difficult customer to please. Not because they're bad people, but because we get to inherit their problem too. And I mean, just as someone would want us to be honest and candid with them about what we're selling or what we're offering, we have to give them an equal amount of respect and make sure that they're not treating the decision to hire us lightly, because we're not treating the decision to represent them lightly either. So it really cuts both ways. So when somebody calls us and the first thing out of their mouth is, "What do you charge?" That's, for me, I've been doing this for a long time. That's a red flag. That's a red flag, not because I don't want to help them, and I certainly don't want to prejudge their situation, but you don't go shopping for the lowest price public adjuster. You find out what they do first and what they offer and how they're different than other PAs, and then you make an informed decision because you've heard the expression, frequently you get what you pay for. That's not how we approach the business. We're not cynical that way, and we don't expect our prospective clients to be cynical either. So
We've got 30 seconds left. Most of our people are listening on Spotify and iHeart. So tell people who aren't in front of the YouTube how they can reach you.
Well, you certainly can Google us at crownadjusting.com. You can call us at our respective phone numbers. Mine is 415-999-5519. Joseph's is 925. Go ahead, Joseph.
361-2994.
Well, in this digital age, all you have to do is push a button to find out what the number is. And of course,
exactly.
You can reach either one of us at joseph@crownadjusting.com or robert@crownadjusting.com. We're happy to take your calls, and we will try to point you in the right direction if we can't help you directly.
Well, Robert and Joseph will be back again with us next month on the Ask the Expert Show. Guys, thank you so much. This is such an important topic, and we are so blessed to have both of you.
Thank you for having us, Stephen.
Thanks, guys.
Likewise.
We'll see you next month.
Take care.
That's Crown Adjusting. That's it for us today. We'll be back again with you next week with more Ask the Experts. Thank you, Rebel.
Thanks for tuning in today to the Ask the Expert Show on W4CY Radio and Talk4 TV. Tune in next week and every week to hear more from our experts on personal injury, insurance, air condition repairs, estate planning, Medicare, and many other topics in the areas of legal, health, financial, and home improvement. See you next week.